Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 7th of January 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And of course, as it's a Monday, we'll look at things from a weekly perspective. In terms of what's been going on, I think we could say we're seeing something of a return to normality after the fireworks of Wednesday night, Thursday morning last week. The euro trading at 114.25 shortly before we recorded the video against the US dollar, up by around 0.28% on the day and unwinding some of those losses that we saw last week. The Australian dollar pushing back by 1% against the US dollar over the course of the week, or really Thursday and Friday, up by 0.28% this morning. Dollar yen, the yen still stronger against the dollar, 108.20 dollar yen trading, the yen making gains of 1.58% against the US currency over the course of the week. Of course, it traded down, or dollar yen did, to a lot lower than that during that flash crash. The Canadian dollar is also pushing back, 133.5610, up by around 1.94% against the US dollar over the course of the last week. With the Brazilian real probably the standout performer, up by more than 4% against the US dollar as the market continues to get behind the new President Bolsonaro's economic reforms. Dollar index trading back below 96, 95.97. It's trading down by around 0.23% over the course of the last week. The question is, will it stay below 96, and if so, for how long? Okay, what's on the calendar? Events that may move the markets today. Well, it's a pretty compact calendar, but still there's plenty to get our teeth into, though not much in the way of high impact data. We've already had service PMI data out of Japan for December. We'll look at that in a bit more detail momentarily. At 7 a.m. this morning, we should have retail sales data for November, month-on-month, year figures of these out of Germany, and that'll be accompanied by factory orders data for Germany for the month of November. It'll be interesting to see how they compare to the weaker PMI manufacturing data we saw last week out of Germany. 9 a.m. Gives us a chance to look at the finances of Italy. Of course, their budget proposals for next year have been very much in the news of late, and these numbers will show us what the public deficit looks like compared to GDP over the Q3 period. At 9:30, we should have Centex investor confidence data out of the Eurozone for January, an early look about investors' feelings and attitudes towards the Eurozone for the month of January. And then at 10 a.m. we shall have retail sales data for the whole of the Eurozone for the month of November. And then we pause until 1500, jumping over the Atlantic for the ISM non-manufacturing PMI data for December. And that's accompanied by the factory orders data for the US for the month of November as well. And it will be interesting to compare that factory orders data against the weaker ISM manufacturing PMI data we saw last week. 1500 will also see the release of the Ivy Purchasing Managers Index data, seasonally and non-seasonally adjusted for the month of December out of Canada. And at 16:30 we'll have 3 and 6 month T-bill auctions, and it'll be very interesting to see how the market's prepared to fund the US government during the continuing government shutdown. And at 17:40 we shall have the day's sole central banker speech from FOMC member Bostic. Okay then, breaking news and comment that's caught my eye overnight. And first of all, US equities rallied sharply on Friday following bumper non-farm payrolls and soothing comments from the Fed Chair Jerome Powell. Meanwhile, Japanese service sector growth slowed in December, and the PMI data fell to, services sector PMI data fell to 51.0 from a prior read of 52.3 on a combination of poor weather and weaker demand during the month. Staying in Asia, US trade negotiators will meet with their Chinese counterparts today in Beijing to try and find a solution or settlement to the trade wars between the two states. Remember, there's a clock ticking, as it were. 90 days just before Christmas was set as a deadline by President Trump for a solution to the trade embargo at the moment. And the UK Parliament returns to work today after an extended Christmas break to begin debates on Theresa May's Brexit plans. So that's back in focus as of now. Okay then, food for thought, something to take away with you into the trading day and beyond, and why not think about this? Despite those bumper non-farm payroll numbers and soothing comments from the Fed chair on Friday, there's still some question mark about what the future path is for the US economy. JP Morgan released some data later on Friday afternoon, suggesting that the probability of a recession beginning within 1 year in the USA was still remarkably high and well above 60%. That it does depend on the measures you use, of course, and you can see three selected scenarios here in the JP Morgan chart here on the left. And I've also drawn or redrawn a chart I published last week, which is ISM manufacturing PMI versus the US GDP growth rate. The PMI data here in blue, the growth rates here in the grey dotted line. Now they're not completely correlated, but you can see some kind of directional relationship between the two. Of course, it could be that on the back of that bumper jobs number, we're back on a normal path. As I say, normal service may be resumed in the US economy. I think that's why people are going to be watching macro data ever closer for the month of January and into the rest of the first quarter. Right, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And please do take the time to read this risk warning thoroughly. Thank you for your time today.